Good morning from the Protos newsroom. The date today is Tuesday, the 22nd of December, and you're listening to the Protos Daily. These are the main headlines this morning. Grayscale has paused investment in 6 of its crypto-based trusts. MicroStrategy has purchased another $650 million of Bitcoin, and the Security Exchange Commission is set to sue Ripple. At the present time, Bitcoin is trading at a little over $23,000, up 2% in the past 24 hours. Monero is the best performing top 20 asset in the past day, up 4.5%, while Ripple, the worst, down 8%. The day that many thought would come has actually arrived. The Security Exchange Commission is suing Ripple Labs for failing to register its XRP tokens as securities when it started selling them back in 2014. Ripple CEO Brad Garlinghouse took to Twitter to fire off on the US finance watchdog, saying, "Today the Security Exchange Commission voted to attack crypto. Chairman Jay Clayton, in his final act, is picking winners and trying to limit US innovation in the crypto industry to Bitcoin and Ethereum." Clayton has previously boiled the concept of securities to this: any investment in a common venture premised on a reasonable expectation of profits as a result of the entrepreneurial or managerial efforts of others is a security. Simply put, if the number goes up because of the centralized efforts of a small group of people, that investment is a security. The Security Exchange Commission currently doesn't consider Bitcoin to be one, as its network and development is significantly decentralized, and many consider the same to be true for Ethereum, despite no official word on the matter. The idea that XRP could be a security has long plagued the digital asset, which pitches itself as a cross-border settlement token for the banking system. However, despite a number of partnerships between old-world money transfer services and boomer banks in recent years, institutional demand and usage of its XRP token, which it sells directly to investors, remains comparatively low. Ripple Labs has sold more than $1.3 billion worth of its XRP tokens in total, money it uses to fund its development and pay salaries. Indeed, to many industry insiders, it's been clear from the start that Ripple's XRP token fulfills this criteria, and clearly has been from the very beginning, and the company is already facing multiple lawsuits from spurned investors with similar gripes to the Security Exchange Commission. Still, full details of the Security Exchange Commission suit are yet to be made public, but the Wall Street Journal reported one was definitely on its way, and it definitely has Garlinghouse spooked. XRP fell up to 20% directly following news. MicroStrategy has continued to grow its already impressive Bitcoin stack, splashing another $650 million on the currency. The Nasdaq-listed data software firm recently bought just under 30,000 Bitcoin for nearly $22,000 per coin, swelling the total value of its portfolio to more than $1.6 billion. This latest purchase represents a 70% increase in the total number of coins held by MicroStrategy and cements its position as the third biggest Bitcoin treasury on record, after Grayscale Bitcoin Trust and EOS Dev's Block.one, sending the company's co-founder and CEO Michael Saylor to cult status among crypto insiders. MicroStrategy stock closed 5% up yesterday after its disclosure. MicroStrategy even raised money by selling bonds last month in order to keep buying Bitcoin, having already loaded up on hundreds of millions of dollars worth in a matter of weeks. In total, MicroStrategy says it's now spent a little more than $1.1 billion on Bitcoin since August, with buys averaging out to just under $16,000 per coin. Factor in that Bitcoin is up 40% from there, and it already puts the firm somewhere in the region of $500 million in the green, not to mention that its own stock price has more than doubled alongside Bitcoin's 2020 rally. Meanwhile, crypto whale Grayscale has paused investing in 6 of its crypto-focused exchange-traded products, including its industry-leading Bitcoin Trust, just days after Bitcoin broke $24,000 for the first time. Grayscale, which is by far the institutional Bitcoin holder on record, says the halt is temporary and enforces a 6-month lockup imposed on the Grayscale Bitcoin Trust. During this time, it will sell no more shares to investors. Such pauses are common for issuers of exchange-traded products like Grayscale, and its ETPs will continue to trade on over-the-counter markets. Grayscale's trusts offer investors exposure to digital assets by taking on risks associated with transferring and storing crypto themselves. Grayscale itself has over 500,000 Bitcoin, having doubled its now $12 billion stack this year. But demand for shares in Grayscale's flagship Bitcoin Trust means it's actually outperforming Bitcoin over the year to date, which effectively means investors are paying a hefty premium for choosing Grayscale over holding Bitcoin themselves. A separate 6-month lockup period has also just ended, which means private investors who bought shares in Grayscale's Bitcoin Trust in June can sell them on the open market, which might help bring down that premium. It's worth noting that Grayscale isn't alone. The latest data from CoinShares suggest investor inflows into crypto funds have topped $5.6 billion this year, representing a 600% increase compared to 2019, leading JP Morgan to warn investors of a looming Bitcoin correction if that demand significantly slows down. Global alternative investments firm SkyBridge has appeared to file plans with the Security Exchange Commission to invest in Bitcoin via a tailor-made fund. While the filings don't lay out exactly how the fund will work or what kind of Bitcoin exposure it will offer, the fund does have Bitcoin in its name. Aside from that, all we really know is that minimal investment in the fund is set for $50,000, and it will be closed to outside participants, meaning you have to be in the know to get in the door. SkyBridge is infamous on Wall Street, having been founded back in 1995 by former Trump aide Anthony Scaramucci, the fast-talking lawyer who Trump fired just 10 days after he was named White House Communications Director. It boasts nearly $9.5 billion in assets under management, spread across a variety of specialized hedge funds operating in different sectors, including real estate. Scaramucci has since found a home among crypto industry insiders, having appeared on Bitcoin bull Anthony Pompliano's podcast, among others, to share an institutional perspective on digital assets. But this marks the very first indication that SkyBridge is willing to get its hands dirty and actually buy some Bitcoin. If all this works out, he might just have to change his name to Scaramucci. More than 3 years after Italy's biggest ever cyber attack defrauded more than 230,000 people of nearly $150 million, it looks like the country's police have finally got their man. Authorities have formally accused Bitgrail founder Francesco the Bomber Ferrano of helping to facilitate a series of massive hacks, which saw the now defunct exchange relieved of 17 million nanos, one of its hosted tokens. It's alleged that even Ferrano was aware of the first major nano breach in July 2017, and he kept the platform intact, continued to accept new customers, and took over customer funds before reporting the theft. He also transferred 230 Bitcoin worth about $1.9 million into his personal account, 3 days before reporting the attacks. News of the hack first broke in February 2018, when Ferrano requested that Nano's developers alter the coin's ledger to cover his losses, something that they categorically refused to do. And things got even worse for the controversial founder in January 2019, when he was declared bankrupt, saw over $1 million of his personal assets seized, and was ordered by a court to return millions in stolen funds. Italian investigators are still trying to piece together whether Varano was directly involved in the hack or whether he just avoided increasing his exchange security measures after the attack. Varano is currently not allowed to conduct any business activities or hold any managerial positions. According to Reuters, Varano now faces charges of computer fraud, money laundering, and fraudulent bankruptcy. Thank you for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protoss Daily on Spotify, Apple Podcasts, and all other major podcast providers.